Hite Hedge Asset Management locked in a 25% gain so far this year and expects energy to fall even more if Joe Biden wins the U.S. presidential election. So joining us now, the man behind the call, James Jampel, Hite Hedge Asset Management founder and Carbon Offset Fund co-CIO. James, good to see you. Let's just take a quick look back here. How'd you get to 25% gains when the energy sector is down 50?
Well, our philosophy here at Hite Hedge in our carbon offset fund is to short the losers in the decarbonization trend. So we have come to the increasing realization that the fossil fuel industry has a lot of similarities to the sort of horse and buggy industry around the turn of the century, and that it makes sense, and it's the least risky way to make money off of energy is to short those that are likely to be the biggest losers in the world of decarbonization.
So I'm curious as to what happens next, James. We have clearly seen energy costs coming significantly lower as a result of coronavirus. And I'm wondering kind of whether that's got the long-term story a little out of whack. Where we are now, what is the risk of a sort of counter-trend rally in this that will affect some of the shorts that you've gone on at the moment, i.e. have energy prices swung too low because of coronavirus?
I guess we don't think so. I mean, we're not in the business of prognosticating oil and gas prices. We do look at the futures curve, and it does suggest that oil prices will rise slowly into the near future. Whenever you're taking a stance in a declining industry by betting against it, there will be, cyclical, or some would say dead cat bounces that you can see. But given the risk controls we have in place, we believe that we have been able to manage that during the history of our fund and continue to have those strictures in place to make sure that we are ready for that should it occur. But our general thesis is that fossil energy is sort of like the classic value trap.
Yeah.
In that a lot of the things that would drive earnings expectations and multiples that you might have seen in the past have really changed, and that you can't rely on the history to predict the future here.
Yeah, especially with returns. I mean, for oil and gas, returns can be in the high teens versus for alternative energy, it can be in the 8 to 10% range or even a little less. What are you long? What are you short right now?
Well, in general, we are, in our carbon offset fund, we are short the most overvalued and vulnerable in the carbon value chain at all times. And that ranges from includes oil, natural gas, coal, and natural gas liquids, and ranges anywhere in the carbon value chain from all the way from exploration and production through processing, transportation, both ocean and pipeline, refining or refined products transportation, retail, and select users of carbon. And in order to present a position that is not 100% short, we hedge that position with a highly diversified long basket, a quant basket, which is designed to take as much volatility out of the fund as we can.